Hey everybody, Nico here and welcome to the Trading Setup channel. 90% of traders use indicators the wrong way. Either they apply them in the wrong market context or they destroy their stats with broken settings. Chances are you're one of them. In this video we're going to look at a few of my favorite indicators and I'll show you how to use them properly. But before we start, I've got a free gift for you. In the description below this video you'll find a link to my free traders chat on Telegram. Inside there you'll find daily trading tips, bonuses and useful tools, secrets to proper indicator settings, and a full library of useful material in the pinned messages. You can join by clicking the link or scanning the QR code on the screen. The traders chat is already growing, full of people who really want to make the best of trading. So I hope I see you there. Now let's get to it. Okay, let's have a look at the first indicator that is a very popular indicator and one of my favorites, but so often I see people using it the wrong way. We're going to have a look at the RSI first. So we're going to add that. I'm going to leave it as it is, but just for the sake of this video and mainly because I like it, I'm just going to change the appearance of it. This is not something that is necessary for you to do, but it's going to be, what I'm going to be explaining now is going to be a lot clearer if I change the appearance just a little bit. Okay, so we are looking at a 5-minute chart at the moment. And first thing you have to keep in mind that a lot of people forget is that the RSI is a momentum indicator. So it's showing us the momentum that price has. Now, if you ask most people, they will say that part of their strategy, if they are using the RSI, will be to sell when the RSI goes into overbought or to buy when the RSI goes into oversold. But you need to keep in mind that what you are doing is taking reversal trades when the momentum is at its highest. Now, I hope this makes sense to you guys. Let's have a look at this drop here. We can see that from this area here, let me draw it in quick. We can see that this area here, from here to here, price was dropping steadily and consistent. Yes, we did have some corrections or some pullbacks, but price was in a continuous downwards trend here. And if we look at the RSI, we can see that since the drop started happening, the RSI has been below the 50 line for the whole duration. And every pullback, it pushed back to the 50 line, and it got rejected every time. Time and again, it got rejected. And this shows me that the bearish momentum is being conserved. We're not changing over to bullish momentum. So while the RSI is moving below the 50 line, especially when it's hitting the 50 line like here and here and it gets rejected, means that I have a much better chance. If I want to enter a trade, I have a much higher chance of winning if I take a sell trade and just stick with the current momentum. Okay, so I hope that makes sense to you guys. Let's look at a different time frame. You will find that this is applicable to all time frames. Look at that beautiful rejection here. We had the price pushing upwards. It got rejected quite solidly right off the 50 line. So from the time that the drop started, my RSI went into the area below the 50 line, telling me that we switched from the bullish momentum here to bearish momentum, and this bearish momentum is currently still being maintained. We haven't changed over to bullish momentum. So while this is here, going solely off the RSI, I will not be looking for buy entries at this moment. Only once the RSI starts crossing over. It doesn't mean I'm going to take a buy trade as soon as it crosses over. There's other stuff we need to look at, but I will only consider buy trades while the RSI is above the 50 line, and I will only consider sell trades while the RSI is below the 50 line, because I'm going with the current momentum. And this is where I've said so many times, it is impossible to predict the market, but it's fairly easy to follow the market. So once you start understanding that you cannot predict the market, you cannot predict what price will do, but you can very easily follow it, then stuff like this starts making sense to you. So when we get a rejection of the RSI, of the 50 line, we are not predicting that price will move downwards, we are looking at the chart, we are looking at our indicator, and we can see, okay, price is maintaining bearish momentum. The momentum has not yet changed to bullish, so I'm just going along with the price movement. I'm not predicting it, I'm merely following it. Predicting it will be taking a sell trade on, let's just zoom in a little bit. If I were predicting, I would have taken a sell trade on this candle here, because by the close of, while this candle was open, the RSI moved up to the 50 area. And I would have predicted, I would have tried to predict that price will bounce. Be careful of doing that. Wait and see what happens. If you waited for this candle to form first, and then got the confirmation that the RSI rejected off the 50 line, you could have taken sell positions and you would have still been good. Whereas taking it while the candle is up like this would have been a gamble. Especially like this now, there's no way I will take a sell trade here, because first of all, we did push through, so it's warning me that bearish momentum is diminishing, and we're moving to, we're gaining more bullish momentum than bearish. But also, I'm not going to try to predict that price will reverse and drop from here. I'm going to wait and see what happens. In this case, that would have saved me, but yes. Okay, so you cannot use I will definitely not recommend using a single indicator by itself. So for the purpose of the RSI, my favorite way to use the RSI like this is with support and resistance areas. So what would happen is I will look for decent support and resistance areas. Let's draw this one in quick, just to give you guys an idea. So I do not take every single trade where the RSI bounces off the 50 line, but I do take trades like this. I can see that we had a decent support level forming here, and it broke through. Now I know when support or resistance gets broken, usually or often price will come back for a retest of that support, and that's exactly what happened in this area here. And I can see that price did attempt to did come to retest the resistance, because when support is broken, it becomes a resistance area. I can see that price attempted a retest here. The retest failed, and at the same time that it failed, I can see that my RSI went up to 45. So it did make an attempt on the middle line. It did not quite reach the middle line, but it's close enough for me, and it turned downwards on this candle. So after this candle here, I would have waited for this candle to close, and after this candle has closed, I would have started taking some sell positions. And as we can see, it worked out beautifully. So I'm using support and resistance. Now here's another very nice trick for you guys, or a very simple trick. If you are still struggling with support and resistance, first of all, I have made a video on that before. Please go watch it. Hopefully that will help you draw in or spot support and resistance areas. But if it is something that you are struggling with, there is a way around it. Let me show you. We're going to be adding some indicators for that. We're going to be adding moving averages. Okay, I'm adding 3 of them. The first one, I'm going to make set to a value of 50. I'm going to leave it as a simple moving average, and I'm just going to change the color and the thickness. There we go. Next up, I'm going to change the second one to 100. And I'm just, again, changing the color and the thickness of it so we can distinguish better between them. And lastly, we're going to set this one to 200. There we go. These are considered the classical moving averages. So you can use these moving averages as dynamic support and resistance areas. And we can see that where price failed, that's failed on the support on the moving average. Price failed on the moving average here, and you will be able to find a lot of examples like this, where price actually listens. It doesn't mean it will always listen, but price often listens to the moving averages. Often the moving averages can be used as dynamic support and resistance areas, and I do use them as such quite often. And we can see there's a beautiful rejection here, and this is exactly what I'm looking for. when I'm using moving averages alongside with the RSI, when price attempted a touch of the moving average here, it got rejected, and it got rejected very properly. But I can also see that my RSI got rejected and stayed above, and the same thing happened here. So there was 2 trade opportunities right here, back to back, within like 7 or 8 minutes from each other. You had multiple trade opportunities, and other times it will make you wait. Okay, so it's not you won't get a trade a minute with this, as with most strategies, but it is a decent trading strategy. This is one of my favorite trading strategies to use. So I'll be waiting for attempts or touches of the moving averages, and I would also then wait for the moving average, for my RSI to just test the 50 line. I prefer it not to be broken. I do not like if it breaks through like this area here. I don't like it if it breaks through quite a lot, but you will often get areas where price is simply tested. It touches beautifully. In fact, let's go to a different asset. Here's a beautiful entry. You can see that that the RSI almost touched the 50 line, but it didn't break through. Now this is the kind of setups I like. So on the close of this candle here, of the first green candle, that confirms, I wait for the confirmation of the rejection. So on this green candle here, after my RSI turned back upwards, I would have started buying. So wait for really, really good touches. It's well worth it to be patient. It will increase your win rate tremendously if you only wait for really good touches like this one here. This one broke through just the tiniest little bit, but it came back immediately. We can see this pushed up immediately. This is something I would like to trade. This is not something I want to trade, and this as well. Okay, so this is, we can see that the RSI broke through. It didn't come back up for quite some time, for quite a few candles. So this is something I will stay away of. But there's another beautiful trade, still above the 50 moving average. And yeah, that's it. There's some beautiful rejections here. Although the RSI did push a little bit too much to my liking. But on this first one, immediately back into bearish. On this one here, I would have stayed out because the second candle here, that even though it rejected, my RSI was still above 50. So that's a trade I would have skipped, because the RSI showed me, by the time that candle closed, the RSI was still showing me that we are still more bullish than bearish. So it's these small little things you need to keep an eye on. But it is, like I said, this is one of my absolute favorite strategies. Works on all time frames. The only thing you want to, if you will have to do, is if you are using or if you are trading options especially, you will want to adjust your expiry if you're changing time frames. We can even look at a 10-second chart, for example, and we will see that it's going to be a bit more sloppy, but it will still you will still get entries even on a 10-second chart. There was one there. You will have to allow for a little bit of leeway on very, very short time frames, but it's still tradable. If you took a 1 minute trade anywhere here, you would have been good. After rejection there was another beautiful sell opportunity here. We tested the 50 RSI, couldn't quite leave the 50 area, and immediately came back down, so you could have taken another trade there as well. So this is one of the ways that I love using the RSI. I totally ignore the oversold and overbought areas of the RSI. That's the reason I set my lines like this, and I highlight the middle line, and I make the oversold and overbought lines, I fade a bit. It's because I mainly use the RSI to determine which direction we are moving overall, or in the short term at least. Let's see if we can pick up some trades using this specific strategy. I'm going to do a 1 minute trade. I'm on a 1 minute chart. You can change this depending on how what the market conditions are. Sometimes the market's slow and it takes a couple of candles to or for price to start turning. At the moment, we are seeing beautiful rejections, and 1 minute will be fine. Okay, so we've got a rejection here, and it's bouncing off the 50 line as well. My RSI is busy lifting. I'm just going to wait for the close of this candle, because we can always still see a massive drop before this candle closes. So I'm going to wait for this rejection to confirm. But if my RSI is pointing upwards by the time this candle closes, I'm simply going to go with a buy. If it does drop down quite a bit, my RSI becomes level or turns downwards, I will be staying out of this. Here we go. Looks like we're going to get a decent trade. Entry, we're going to take a buy there. My RSI rejected off. If we zoom out a little bit, we can see clearly that the RSI rejected off the middle line there. My price bounced off the moving average. After it broke through, it came back for a retest. Remember what I said earlier? Quite often when price breaks support or resistance, it comes back for the retest fairly soon. And this is exactly what happened. We broke through this resistance area here. This was the retest. And with that retest, my RSI tested the 50 line. It maintained bullish momentum, so we didn't switch back to bearish momentum while the retest was happening, telling me that it's more likely to continue moving up now because it did get rejected and we are maintaining bullish momentum. So now we just need to wait this trade out. It's almost done. Just need to wait it out. Like I said, you can take a 2-minute trade or 3-minute. Depends on market conditions. Here we go. Good entry. It was close, but it was in, and that's all that matters. So you can take 1-minute or 2-minute trades just to have a look at historical data, but not historical data for the last few days. Just have a quick look at the last hour or 3. See how price is behaving. Are we moving quick or not? And then you'll get an idea of how long your expiry should be. This is something it will be changing. It will change often from day to day. So that's something you need to check on. But like I said, short expiry, 1 or 2 candles, maybe 3, depending on in what mood the market is at that day, and that's it. So that's the RSI. Now, let's have a look at one of my other favorite indicators as well. And we're going to first look at it by itself, and then we're going to look at ways to combine it with, in the same way that we use the RSI along with the moving averages. So this will be the ADX. Again, this is, I always change the color style of this because this is the way I like it. Okay, so the ADX shows me 3 things. It's got 3 lines. The red line is the DI minus line, the green line is the DI plus line, and the yellow line is the actual ADX. Now, the ADX itself does not show direction. And this is something I see a lot of people struggle with when they start using the ADX. It's one of my all-time favorite indicators. I can't go without it. But when people see it for the first time, they struggle with the fact that the ADX does not show you direction. What I mean with this is we can see the ADX climbing when price is falling. We can see there was a very strong drop here, and the ADX was rising. And we can see that while price was going up here, we can also see the ADX rising. So the ADX does not show us direction. This is actually a great example. We had a downwards move, ADX was rising, it leveled out, ADX was dropping, and then ADX started climbing again when price started moving upwards again. So ADX, the ADX line itself shows you the strength of the current move. So the higher the ADX goes, the stronger the current move is. And in this example here, where we were dropping, we can see how rapidly the ADX started coming up, and it just kept on going higher for quite some time, telling me that this is a strong move with a lot of momentum behind it. So in a move like this, when the ADX starts climbing rapidly like this, I will definitely not be looking for any buy trades. I will not be going against the move. So the only trades I'll be looking for is trades that goes along with the move. So in this case, down. So I'll be looking for sell trades only. While price was dropping like this and the ADX was rising like this. And then we get areas where we can see movement. We can see some movement, but my ADX is quite low. Now this is the areas where I think personally that the ADX outshines any other indicators. Because when the ADX is low and remains low, it's telling me that price doesn't have a lot of momentum. And here's where the next thing comes in. So the DI lines, the DI plus and the DI minus, shows you can think of it almost as a rate of change. It shows you how quickly the price of an asset is changing. Okay, so relative to previous candles or relative to previous periods, it shows you how quickly price is changing. Now, as a general rule, not a law, but a general rule, if you get a low ADX like we have here, and you get a big DI spike, that means that we do have a big move, but there's little or no momentum behind the move. And moves like that are likely to reverse. Not always, but likely to. And we can see here that we did get a big DI spike, and there was a decent DI spike there while my ADX was relatively low, and price got rejected. Now, using it by itself, again, not always the best idea, but if you use this, there was another decent spike, but the ADX was low. It started coming up with the DI, along with the DI spike. But let's find a beautiful example of stuff that I actually like to trade, and we get a lot of we do get a lot of examples of them during the day. Let's go to a different asset. Not quite. Okay, so here's a beautiful example. We had the ADX, we had this big move here. ADX was climbing strong, came back down and leveled out, and then we had a sharp spike here. This was a decent, very sharp spike on the DI plus. When this happened, at the same time, we can see price made a run for the moving average, the 200 moving average especially. This was the main one that it was testing. Price made a run for it, but got rejected. And this is a sell opportunity for me. This is where I like to take sell trades, because my ADX is relatively low, telling me that there is no current momentum. But we did have a very quick rate of change. So we had, you can think of it as a hollow move or an empty move. It's a quick move, but there's no momentum behind it. There's no pressure to keep it going. So it just falls back to where it was. And this is exactly what happened. We had the quick jump and price fell back to where it was before we had the spike. And then it just stayed there for quite some time before it eventually ended up picking another direction. So these kind of spikes are the ones I like. I love to trade these, but like I said, I use the ADX and I don't trade spikes by themselves. I do look for these spikes to occur on support and resistance areas. Now, whether it's the moving average or it's a support and resistance area that you drew in, or maybe a channel, you do need to confirm in some way that we are sticking to a current move as well. Let's just see if we can find an example of if I had a channel going somewhere. Not a lot of good example there. Let's look at a different asset. Maybe I'm looking for an area where price moved in a channel for a while, so that we can just have a look at the way the ADX behaves when price gets close to the channel. So we could say this one started about here. This is not the best example of a channel that price was moving in, although it's fairly decent. We can see this spike, for example, is a bit faint. This is not something I would trade. My ADX, it's not the DI plus is not very far from the ADX, and it's not quite a sharp spike as we had in the previous example. But just to give you an idea of how price behaves, that every time we hit the upper channel, we see a spike on the ADX. And when price eventually broke through the channel, we can see that this was where the ADX started rising. The ADX itself started rising, telling me that now when we got here, there was a lot of momentum. The upwards move was gaining a lot of strength. So while it was gaining strength, it eventually broke through. But while it was in the middle area here, we can see that the ADX is relatively low. there's not a lot of strength behind the move, so there's a good chance that this will pull back from the resistance line of the channel, the upper end of the channel. And that's the way we use it. So whether you are drawing in manually support and resistance areas, remember trend lines are just diagonal support and resistance areas. They work exactly the same. So whether you are using this or you are simply just using the moving averages, the effects are going to be the same. Another thing I like about the ADX is the fact that this works beautifully on even 10-second charts. Let's see if we can find a trade. A decent entry where we get a beautiful spike that's on the moving averages for us. There we go. So we can see that price is assaulting here. It is still rising. The DI is still spiking upwards, so I'm not going to jump into a trade immediately. I'm going to wait for it to turn down. Then I'm going to take a 1-minute sell. If my ADX stays down, okay, this move was way too quick. There's no way I'm taking a sell on this big move here. But you get the idea of how it's supposed to work. At least this was a good example of what a trade would look like. Sometimes it moves quick like this, and instead of getting in late, I will simply pass on a trade, because if you do get in late, your chances go down tremendously. Let's just see if we can find a quick trade. 10 seconds. If not, we'll switch to 1 minute. Okay, let's switch to 1 minute chart and see if we can find something that looks similar. Start at the top again. So right now I'm just looking for here was a good example of a trade opportunity. Beautiful rejection. We had a decently sharp DI plus spike while my ADX was coming down from a high and leveled out. So there was some trade opportunities there. We missed that, unfortunately. Okay, so we could see this pop down. We don't have a decent DI spike quite yet, so we're not gonna look for a trade exactly at that moment. I'm also ignoring any assets where the ADX is high like this and my DIs are quite low. That's not useful. Well, that's a setup you really want to avoid. Don't look for trades when the ADX looks like that. Okay, so we have a relatively low ADX, although the ADX is pushing upwards at the moment. But we can see we have a DI spike, although this is a beautiful DI spike. This one is not. We can see it's not smooth like the DI plus spike. The DI minus is moving up and down. It's going up, yes, but it's not a spike as such. Whereas this move here, we can see how smoothly it reversed. Although this one here, I'm not liking it, especially the fact that the ADX has started coming up really strong now. So there's a good chance that price is going to continue downwards. Let's see if we can we should be able to find something. Even if we don't find something on 1 minute, we'll have a look at the 5 minutes as well. Again, this works on any time frame. You can use it on any time frame. Obviously, the higher your time frame, the more solid your entries will be, but the slower your entries will be. Again, we can see the ADX rising, the DI plus rising quite quickly, but it's not a smooth spike. Let's have a quick look at the 5 minute chart. See if there's anything we can spot that's busy happening. It will happen, and it doesn't matter what strategy you are using, but it will happen that at times you will not be finding entries in the market. You will look at different time frames like we are doing now, and you're going to struggle to find entries. This happens with every single strategy. So the mistake a lot of people make is they start thinking they're doing something wrong, and they start changing their strategies. They start messing with it so they can start finding entries again. That's a massive mistake. Just wait it out. It doesn't matter what you change your settings to. I am pretty sure we've been through these assets on a 1 minute chart, for example. If I start changing the settings of my ADX and my RSI and my moving averages, it's going to change. The way it looks is going to change, and I'm going to start seeing some entries. But then a couple of hours later, I'm going to be experiencing the same thing. Or maybe tomorrow I'm going to be experiencing the exact same thing. And then I'm going to start changing again changing my settings again. And that's a infinite loop that you're going to go into, and you're going to keep wondering why your strategy doesn't remain profitable. Because people see that they're not getting entries, they either start forcing their entries, taking trades they shouldn't be taking, the trades that are outside of their strategy, or they start changing this indicator settings or strategy parameters, or just making changes so that they can see a few entries again and feel like they're trading. It's going to happen. There are going to be times where you will not find entries. Doesn't matter what strategy you use, because market conditions change all the time. That's the reason I don't use a single strategy when I'm trading. I use quite a few. So when I'm getting signals from one, I might not be getting signals from the other. But I stick to my strategies. That's the important thing. So whether you're using one strategy or 3 strategies or 10 strategies, although 10 is a bit much, but whatever strategy you're using, make sure you apply discipline and patience to wait for an entry from that strategy. Don't go changing it because you feel like you haven't gotten an entry in a while. That's a very, very bad habit to pick up. It will happen. Doesn't matter what strategy you're using. You will get times where you're not getting a lot of entries, and that's normal. Okay, so we're not getting a lot. ADX is unfortunately not giving us any entries at the moment. Now this one might have been good. Unfortunately, we're not getting too many entries from the ADX at the moment. Is what it is. We can't force it. Let's have a look. Just give it a minute or two, because this is a beautiful drop. We can see that my ADX is relatively low. It has been low since about here, and we're getting this big spike here at the moment. So what I would like to see is price hitting this 200 moving average. Once it does and my ADX turns back, I'll take a buy trade. Then I'll go for the buy trade. That should be, I'm going to make this a 2-minute trade, by the way. If it pushes back here, it's not going to be a trade for me, because this is, even though it's close, it's not quite on the, it's not close enough to the 200 moving average. I like them to be very close or touching. This is a beautiful example of touching and touching. Here's an example of close that I would consider trading. Okay, regardless, I like them to be really close or touching to the support area. We can see that the ADX is starting to come up now. We did get the spike. We might get a pullback here, but this is not a trade I'm going to consider taking at the moment, although it's likely going to push up, but it's not fulfilling the requirements of my strategy, whereas I need the rejection of support. When I want to do this, like I explained earlier, I need to touch or really close. And although I got the decent DI spike and the ADX is very low, I did not get this support touch or support rejection. So I'm going to stay out of this trade, and here's a good reason why. Let's see if we can pick up some more trades, maybe with the RSI. Which asset was that? Okay, so see the way this is going to be a sell trade. If you look at the way that the DI spiked here, it's right on the moving averages. This pushed back all the way through and got properly rejected. This one, very weak attempt on the moving average again, but it didn't go anywhere really. And there's the drop. And we can see at the same time, if I zoom out a little bit and I consider the RSI here, I can see that the RSI is constantly making attempts on the middle line. Almost went through here, got held back by the moving average, stayed below, another attempt, and we are seeing that the RSI made another attempt. It did go over just a little bit, and it's going back down now. And taking this into consideration, that my RSI is overall, since this area here has overall maintained bearish momentum, and I get this beautiful DI plus spike telling me that it was a sharp move, but there's no strength behind it. It's likely to reverse or likely to come back down to where price was at least. And taking everything into consideration, that's the kind of trades that I am looking for. So that was a beautiful trade, beautiful entry. We got it at the right time. Might push back. Let's see what happens. We've got a few seconds left on this. although I doubt that it's going to do any damage on at this stage. We should see price come back down to this area here. But anything could happen. Sometimes anything does happen. Don't get discouraged. You will be losing trades. I lose trades every day. It's part of the game. Losing a trade is just something you need to accept. There is no 100% strategy. Take my word on that. There's no strategy that's going to give you 100% win rate. There we go. We got a trade entry from the ADX as well, and we had it confirmed by the moving averages and the RSI as well. So, two of my absolute favorite indicators when used this way. And I hope you guys understand a little bit better now, at least the RSI and the ADX as well. If you want to take your trading even further, I have a private trader community. Inside there, we do daily live trading sessions. I share strategies and indicators that I use myself, and we share daily trading setups. You can't get in through any link. The only way in is through a direct message to me. My contact's in the description. So if you're ready to join, text me. It's all free. And don't forget to subscribe to this channel. There's a lot more content coming. I'll see you guys in the next video, and until then, may the pips be with you.